the same thing applies to manufacturing account. But the only little difference here is when you get to current asset, where you see the closing stock of raw materials, closing stock of work in progress, and closing stock of finished goods. They are current asset of the manufacturing industry, because it has not been, raw materials has not been put into process, and work in progress has not, closing stock of work in progress has not been turned to finished goods, while the finished goods also has not been disposed by the company. So the form part of the closing stock at the end of the day, that is only where there is little difference, and we have a cash in hand. That is how we balance our manufacturing account. And another thing, the method, the ways you apply additional information in trading profit and loss account, that is also how you got in a manufacturing account. They can give you a comprehensive question which will involve additional information. So it has no procedure. The procedure we use when we are preparing trading profit and loss account, that is also what we will use when we are preparing manufacturing account. Now let's go to, we are given an illustration here. Now we have a Badmos Limited is a manufacturer of kitchen furniture. The following information was extracted from the book of the company for the year ended 31st December 1998. Look, we've done trial balance has been drawn. You see those information that is involved, and at the end of the day, you see that the trial balance arithmetic accuracy is being given. So now we are given additional information, which has light and power charges accrued at 31st December amounted to 100, and insurance paid at same date total at 960. You see this information is given. We will do them one after the other. We are given this is the kind of comprehensive question of a manufacturing account at which it touches any area that question can come out in manufacturing account. So you are required to prepare manufacturing trading profit and loss account and balance sheet as at that date. And don't forget our techniques when we are preparing additional information, that any information that as regards to additional information must be treated twice. By treating it twice, you are complying to double entry principles. It will appear in the income statement, and it will also appear in the balance sheet at the end of the day. So we do justice to the question, and we begin to, the first thing we do is the working, and we go to the work per se and begin to balance them into their various accounts where it belongs to at the end of the day. So let's begin to work that question now. So the first thing is to prepare additional information, which is the workings. Now this is the working. Number one says light and power charges accrued as a 31st amounted to 1,000 naira. So, and you know anything that is accrued is an outstanding, or we call them accruals or owing. So it has to be hard, but prepaid has to be less or advanced. Now, lighting is under expenses in the trading profit and loss account. So it is an electricity that was used to power the admin. So light and power, we have the amount is 6,000 naira. Then after that we had accruals. We have accrued, which is 1,000. So 7,000 is going to the profit and loss. So this one is going to profit and loss. That is the number one. Then we have the rent and insurance prepaid. It is given in the question, rent and insurance prepaid, and that one is 13,920. If you look at the question, you see that it is 13,920. So now let's go. The prepaid. You said it is prepaid, and prepaid has to be less. So you less it, that will give you 12,960 at the end of the day. So this is going to pay annual, this is going to balance sheet, and this also accrued is also going to balance sheet. It will appear in profit and loss, and it will also appear in balance sheet. So that's how we prepare it. The same thing we did in the trading profit. That's also the way of the procedures which we also follow in preparing manufacturing account. Next one, we have stock were valued at 31st December. This one is going to, they are going to trading profit and loss, and they are also going to manufacturing. They are also going to balance sheet at the end of the day. So we leave this for that. When they need to post them, then we post them to the necessary place where they belong to. Then C, we have goods manufactured during the year to be transferred to the trading account. When we get to manufacturing account, I will explain that for you. So let's leave that for now. When it is done, I will explain it. So D, motor expenses are to be allocated equally to factory expenses and the general administrative expenses. Now, something happened here. We have two expenses, which is the motor expenses. That means one is going to factory and one is going to expenses. That means one is going to factory overhead. So we are just asked to prorate it. That means we allocate them. We are only given motor expenses, only one, and we are asked to allocate it to the expenses and the factory overhead. Now, it will be allocated equally. Now, let's look at the motor expenses. Motor expenses here is 14,400. So, what we now do is that we write motor expenses. The one for factory overhead. The one for factory overhead. Since we are told to divide it into 2, then you just say 1/2 times 14,400. So the one that is going to factory is 72, and likewise expenses. The one that is going to expenses is also 1/2 times. So that one is also 7,200. So since we are told to allocate it equally to factory and expenses, so that is that on my motor expenses. Motor expenses. Then number 3, we have office loose tools on hand on 31st December were valued at 6,000. There is one thing I want you to understand here is that there is a little problem here. And what is the problem is that if you see, look at the trial balance. Let's look at the trial balance. We see loose tools. The value of it at the trial balance at cost is 10,800, and we are now being told in the question that it is now valued at 6,000. That means depreciation has occurred, though we are not given the question. But accounting has to do with interpretation. It depends on how you interpret it. If you misinterpret it, then you have a wrong figure. So here they are telling us that there is what we call depreciation at hand. So the value is 6,000. So to find our depreciation, so this one is going to balance sheet. So they want us to write the depreciation off at the end of the day. So if you let this from this, you see that we have 4,800. So 4,800 is what is going to, depreciation it belongs to factory overhead. Most of the times it belongs to any expenses, either of the two, depending on what they are using it for. Now we'll be going to plant and machineries and motor vehicle. That is the F information. F. They say plant and machineries and motor vehicle are to be depreciated at the rate of 10% and 25% respectively. Now, depreciation. Let's first treat plant and machinery. So plant and machinery is 10% times 72,000. So that depreciation for it is 7,200. Then that of motor vehicle. That of motor vehicle is 25%, and the cost of a motor vehicle in the trial balance is 36,000. So at the end of the day, we have 9,000 naira at the end of the day. So that is what is going to the trading and loss account at the end of the day. And let's quickly go back to format. That is where we have to be very careful. There are some information that belongs to party overhead, which you must not post the expenses of trading to. And we make you to understand that the depreciation on plant and machinery only, or repair of plant, because plant and machinery are mainly used in the factory. So one has to be very careful when we are posting these items into the place where they belong, group where they belongs to. Now let's now prepare a manufacturing account at the end of the day, because we have been told in the question that we should prepare manufacturing. So this is how you prepare it. You write manufacturing